Welcome, everyone. It's the Crypto Lark. Very excited to have on today Brian from KAVA Labs, which is a hot IEO coming up on Binance. Brian, how's it going?
Very good, man. I'm really happy to be here. I'm excited to just talk about all the things that we're doing and get to know sort of what your audience is really interested in.
I'm very excited to have you on because Kava is just a super interesting project. I mean, we're talking about multi-chain, decentralized finance, collateralized debt positions, all that fun kind of stuff. We're going to be breaking that down, going through all of these interesting points. So guys, make sure to stick around for this interview. It's going to be a really, really interesting one. But before we do get into that, just a few disclaimers for everyone out there in the audience. Always make sure to do your own gosh darn research. There is always a risk investing in any cryptocurrency, so make sure to have the information before putting your hard-earned money on the line. Also, this is not a sponsored interview, but I am an investor in Kava. Also, there will be an airdrop, so if you guys want to get 100 Kava tokens, we're going to be giving away to 10 winners, so check out the link down below in the description for some more information on that. And also there'll be links down below to the website and other social media where you can engage with Kava and learn some more information overall. So with that being said, Brian, let's start off with the elevator pitch. Give us the high level. What are you guys doing?
Sure. So Kava at the highest level is a cross-chain DeFi platform. And what that specifically means is we built a blockchain that accepts collateral from other blockchains like Bitcoin or XRP or Binance chain. And those users can then use that collateral to get loans without needing a counterparty to issue them a loan. It's completely minted by the system itself. And they can use that to get leverage and effectively margin trade their crypto assets or to hedge and receive a stable coin to have stability against those crypto assets.
So basically, we're looking at, I know a lot of people out there are familiar with Maker and what they've been doing. So you're kind of taking that and really expanding out. So we're going to have Bitcoin, we're going to have XRP. So XRP fans, we got a place where you can actually put up your XRP, right? And actually get a collateralized XRP backed loan. We've got BNB, we've got Atom as well. So basically, you'll be able to put these in there and get what you guys are calling USDX. So that's going to be your version of a stable coin. So that's really, really exciting in of itself. I mean, I love decentralized finance. I love where this whole space is going with decentralized finance. But let me ask you this question about your USDX token. We've seen DAI struggling to get any kind of real adoption on any of the big platforms and exchanges. I mean, it's used on some decentralized exchanges, but they have very low volume. So how do you get USDX adopted?
Yeah, so I think it really comes down to the industry right now loves centralized stablecoins because they have lots of liquidity. It's hard to compete with the liquidity of Tether. It has, I don't know the exact numbers, but let's say roughly 80% market share compared to everything else. DAI has been growing, but it's still relatively small compared to something like Tether or even Paxos for that matter. And I think really what it comes down to is where can you use DAI today? What are the alternatives? And if you compare something like DAI in its first form, which was just regular DAI, where it was competing one for one with something like Tether, it was either you wanted a centralized stable coin and you're fine with that risk model of trusting a gateway or a trust to hold your fiat and give you this tether, or it's something like DAI where it's actually backed by crypto and you don't want to use that trust model. I think the interesting part of what we're doing, and to some extent what MakerDAO is moving into with multi-collateral DAI. So both of our systems are multi-collateral now, or at least when they upgrade, they will be. But in that version, we actually can offer a savings rate on the stablecoins themselves. So anyone who holds USDX will actually be able to bond it and receive a yield every year, which will be more than just the stablecoin value itself. So somewhere probably between 2 to 10% based on market conditions yearly, which makes it a very attractive stable asset to hold and should provide a good demand on the stablecoin side for why you should use it over something else like Tether.
That's really cool. I love these abilities of decentralized finance, just total, I mean, like up to 10% yield. I mean, that's massive compared to bank accounts, right? And I think one thing to really underline here too is that even though Maker is going into the multi-collateral zone, their multi-collateral is really just other Ethereum-based tokens at the moment. So whereas you guys, Bitcoin, XRP, Binance token, Atom, and Ethereum as well. So that's really multi collateral when we start to look at the different chains, right? And I think that's where some of the Ethereum based applications have a bit of a weakness in terms of there's a lot of people using a lot of other chains. And of course, if you're not doing Bitcoin, you're going to
If you're not
struggle
doing
because
Bitcoin,
Bitcoin's the
you're missing
king.
out on most of it. Yeah,
That's
exactly.
right. That's right.
I'll
Bitcoin is
be
the
honest
king.
and say most of the people at Kava that are working here are very much Bitcoin maximalists. We love Bitcoin, and the whole idea that really appealed to using the Cosmos SDK and why that framework was appealing to us was, I think Eric Meltzer put it best, where it said, it's basically taking Bitcoin, which doesn't have any smart contracts, and strapping a Gundam suit on it so it can fight, but it's effectively the smart contracts on top of Bitcoin, and then you can make it do everything. And the Cosmos team are Bitcoin maximalists as well, at least most of them. So we think that that's obviously the main markets where all the users are. And if we can address other big market cap coins like XRP and BNB, that's even better.
Very, very cool stuff. So the KAVA token itself, can you break down for us what exactly is that doing? We've talked about the USDX token, but the KAVA token, the one that's available in the Binance IEO and will be available on the markets pretty soon, what does that KAVA token actually do?
Yeah, so it does a lot. And I got to remember all the different pieces of it, but I'll try to start at the top. So first, it's designed for the security of the system. The Kava blockchain or the platform is a proof of stake system. So anyone who holds the Kava token can stake that and earn inflationary rewards. They also can vote on any of the key system parameters of the platform. So what types of collateral will be accepted? What is the debt to collateral ratio? How many validators are allowed to participate in confirming and signing blocks? Basically anything that's a parameter of the system. If you hold Kava, you can vote on it. And I think of this as very much like a decentralized central bank, but for crypto, since we can accept collateral of all different types of assets. What we have is just a bunch of different levers as Kava holders to influence interest rate, to influence the savings rate, to grow demand of the stablecoin if we want, to accept different collateral that we think are appropriate for the risk that the system wants to have, and then even how much USDX can be issued in total to manage that risk. So I think it's a very cool DAO in terms of like an experiment of a DAO and what everything that Kava token can hold. But I guess importantly, on the economic side of things, not only if you hold this and stake it, you earn block rewards, but you also get anytime the CDPs are used or someone receives a loan and then pays it back, they actually pay a portion of that in it's a stability fee in Maker, but they pay in our system, it's a fee in Kava, and that is burned by the system, deflating the total supply. So if you're a long-term holder of Kava, as the system gets used more and more, the amount of Kava is slowly reduced and your value should be appreciating as the system grows. So that's a very important piece. And then the last thing is with any reward, there's also risks, and Kava holders act as the lender of last resort, meaning that if for whatever reason the system is failing, let's say too risky of an asset was supported, we took in, we started supporting clams and CDPs or something, and then if that happens and it crashes and USDX becomes under collateralized, then more Kava is minted and auctioned off on the market. So the total supply of Kava is inflated to make up that difference, to pull off USDX from the market and make it reach a point of being stabilized once again.
And that's really talking about black swan events for any of the collateral which might come in. So obviously that comes back to the governance, and that if you are holding tokens and participating in governance, it is definitely in your best interest to not allow things that should not be part of the collateral system in.
Please no clams. We've had some interest from a bunch of random Chinese projects saying like, hey, please support our coin in your CDPs. My reply is, we'd love to consider everything, but ultimately it's not even going to be our decision. We're starting with some of the top, most highly liquid, most used assets on the market. But then from there, it's really going to be up to our validator set and our governance group for what assets we go into from there.
It's super exciting. I mean, again, just bring it back. It's Bitcoin, it's XRP, it's Ethereum, it's BNB. I mean, we're talking about the top assets in the crypto space here that are now finally getting their ability to have these basically smart contract issued collateralized debt positions without having to trust an exchange or something like that, or a third party service. That's really big. That's really exciting. So that's the potential for this. Super cool indeed. And obviously being able to get staking rewards too on the Kava token, that's just an extra bonus that comes in here. Now, one thing that we have seen with Maker is these these big rate swings that we see happen. I mean, this year Maker went from like 2% up to 20%, back down to like 15% or 12%, wherever it's at now. So is that just, par for the course? Is that just what's going to be happening when you have a bunch of people participating in a governance model, trying to their best? I guess it makes us feel bad for central bankers trying to adjust rates. Not really. I don't feel bad for central bankers, but you kind of get an insight on that. So what is your thought on that and the big rate swings and things? Can we expect that with Kava, or do you guys have something in place to try to mitigate those big rate swings?
So there's a multifaceted answer to this question. And I think let's start at the start, which is Maker created a stability fee structure, which was very low. And I would say almost artificially low at like 2%, just to drive demand on the platform. You're effectively getting a margin loan on very risky assets, where if I was to even make a Merrill Lynch account today and do a margin trade on Apple stock, I'd pay 20-25% roughly APR on that. And then here's Maker doing far more risky assets, doing it for 2%. So just comparatively, I think that was unreasonably low. And they had to compensate and swing that up really high to make up for it. But the reason why they had to do that, I think it was actually fairly rational. They're like a central bank because they're single collateral right now, with only DAI and ETH backing it, where they only have one lever to pull, and that's interest rate up or down. There's no like Maker that gets involved that inflates or deflates based on what's used. That's completely separate. It only gets involved in their multi-collateral evolution. So what has happened previously was they just were the central bank with a single lever, and that was interest rates and nothing else. They couldn't print more money. They couldn't do anything. And they were basically forced to use this lever to the maximum in both directions. I think in these multi-collateral systems like Kava, we now have many levers to pull. We can adjust debt to collateral ratios. We should have a lot more active governance so we can manage this more effectively. Governance has been a big issue in Maker. Just a very small portion of people are actually participating. Where in our system, we have 100 plus validators that have to be live, have to pay attention all the time. And they have slashing conditions attached to doing a good job or not. Mm-hmm. So there's a lot of incentive to manage things well. And then as this goes forward, I think that with just sort of the overall group that's managing this, we should be able to, sorry, I'm losing my train of thought. Let me just try to formulate these words because there's multiple pieces of this. So to go back to your question, why are the rates so high? Is that going to happen in Kava? I think it will to some degree, because we're dealing with assets that are moving in price, and mm-hmm. they're very new systems that always have some element of risk that we're going to have to adjust for on the fly. But I think we're mitigating that by enabling our governance group to have multiple levers to pull to adjust more rapidly than Maker has been able to. But I would just also reflect again, I think 2% was way too low. It probably should be more like 5 to 10 if it's within a good balance. I think everyone's properly incentivized at those levels.
I think the thing everyone has to keep in mind is that decentralized finance is a very young part of the entire crypto ecosystem in an industry that is itself quite young. We're going to see all kinds of crazy happen. I mean, in terms of rate swings and stuff like this, it's part of the growing pains. It's part of the process in actually determining how this all works and what the best methods for it are and how the best rate responses are going to be and things like this. You have to realize there's humans on the other end that are making governance decisions, and it's going to be part of that process. So that's something everyone keep in mind. Now, I want to explore the idea of, synthetics and derivatives. So this is also something that's going to be possible with Kava. Can you expand on that a little bit for us?
Yeah, so if we think about synthetics, it's creating effectively a peg to an asset that might exist somewhere else and giving people exposure to it. So with the USDX token itself, it's really just a soft peg token pegged to the US dollar. It's a synthetic of the US dollar. Kava, the infrastructure that we've built, actually could be used to create a number of different synthetics, even a synthetic Bitcoin, depending on what user demand is. So, with the foreseeable future, who knows if USD will be king, if it's renminbi, if it's Bitcoin or Ethereum, like who knows what the most ideal asset is in the future. For Kava, the governance group can literally vote to make a new synthetic or adjust the peg of the current synthetic to another asset if that's desirable. So we have that flexibility, just because the infrastructure with oracles being run across all the validators, and we have the CDP systems as well to back it. Now, with the long-term future, we actually started to give you a little history on KAVA, doing cross-chain settlement with payment channels. So we built a layer 2 wallet that could do non-custodial swaps between BTC, ETH, and XRP and DAI. So we did actually quite a bit of work with Maker. And what is so fascinating about that technology when you apply it to something like what we're building today is you can allow users to take their USDX, lock it up in a payment channel, and then place bets with each other on the price feeds of other assets, or the price feeds between USD and Bitcoin, for example. And just in a single line of code, you can say, let's use this price feed, but give it a multiplier of 3x or 100x. And what you can make is 100x leverage trades between two parties, as long as there's a party who's willing to put up collateral on one side for accepting the trade on the other side. So we actually can create products that to some degree can compete with the 100x leverage plus that exchanges like BitMEX are doing right now. I would say that's very much in the future, and we're focused today solely on getting the CDP platform operational and supporting the major assets, and that's going to take us a number of months just to do that. But once that's done, I think then it's time to really expand into the existing marketplaces of all the range of financial products and try to offer that the best we can in a decentralized fashion, where we eliminate trust or the need for trust and counterparty risk.
Yeah, obviously, it's really interesting to see where you guys are going, right? What the long-term vision is, and even just looking at the different synthetic possibilities. I mean, we could look at Japanese yen as a great example, right? It's the second biggest fiat in the crypto markets, and I think it's actually probably geographically, in terms of a single country, even the biggest, because you think about the US dollar, it's not just America, right? The US dollar, right, everyone everywhere is using it. So if you really think about Japan and just it's the yen in Japan, that is not like an international currency in the same way that the dollar is. I mean, so you can see, for example, well, I'm going to deposit my Bitcoin and I want to take out a loan. Do I want to take it in dollars or maybe in yen? Obviously, it's not there yet, but that could easily be in the future. It's just a governance decision for the people participating in the governance model to make that decision. Like, hey, we're going to start offering, USD yen or not? Yenx, I guess would be the thing. Not USD yen, but yeah.
What I love about that too is if we take an asset like a fiat asset that currently has a bond market with negative yielding bonds to the US dollar, we actually can take that asset and then provide people an opportunity to bond it, say a new soft peg to the lira or something. And then they can get positive yield on that using our synthetics when the actual lira is negative, right? So it's just super cool.
It's crazy. And I look at all these decentralized finance options and the ability to, get good interest on your fiat holdings, right? And obviously there's risks. We're talking about crypto and even this stuff. But if you look at, the rates potential for USDX, right? And you look at your average US bank account. I mean, Chase is giving like 0.01%, 0.01%. Yeah. Like Bank of America is like 0.03%. Like if you have $100,000 sitting in a US bank account, even if you take like 5 or 10% of that, put it into something like USDX, you're automatically probably tenfolding your annual interest rate based on what you'd be getting from the bank. It's craziness how much decentralized finance is just busting open the doors of the whole ecosystem here and what's possible with money. And so we're talking about multi-chain decentralized finance here. So we're talking about interoperability between chains. So like what are some of the biggest challenges here in actually making all of this possible?
So there's, on the technical side, there's a bunch of challenges. On the business side, there's a bunch of challenges. On the technical side, we're actually very blessed to be building on the Cosmos framework. I think it's one of the most advanced and proven to date. And I mean, I think the idea that Facebook's Libra positioned and created almost a fork of the consensus that Cosmos is using for their own speaks to a lot of how credible it is. We have blockchains like ours, KAVA. Binance chain is also built on the Cosmos SDK and of course the Cosmos Hub. And what's so beautiful on this side is as each group, as we roll out a new change or as Binance rolls out a new module or Cosmos, all of us can, since it's all open source, we can say, oh, that looks pretty good. I'm going to add it to my blockchain. And we all can just rapidly evolve much faster than if we were all independent blockchains. So one, that's just a really cool technical advantage. But then and also just adding on to that, the IBC module, inter blockchain communication module, which is being released by the Tendermint team in actually just 2 weeks at SF Blockchain Week, where they're having a big DeFi hackathon. As KAVA implements that, as Binance implements that, it basically lets any assets that are on Binance chain flow into KAVA, and any assets that we have flow into like the Binance DEX. So we can put USDX there to be a trading pair. We can put the KAVA token. We can get their BTCB, so people can quickly get exposure to even that form of BTC in our CDPs. So all that's like very low hanging fruit for us, which is really nice. Where it gets a bit more complex on the technical side is using a completely different blockchain like XRP or a direct bridge with Bitcoin. And just to explain kind of how usually the inner workings work, and it's a custom bridge for each thing because no system is the same. But roughly what happens is we have a multi-sig address on the blockchain. Let's use XRP as an example, where the validator group collectively of our blockchain control it. So when a user that holds XRP is interacting with our CDP platform and says deposit their crypto, they're sending XRP to this multi-sig that the validators control on our end. When they see that XRP hit their account, they then mint a replication or a token peg to that XRP on the KAVA blockchain, which shows up on the CDP platform to the user. Then the user can use any smart contracts as normal, but with their representation of XRP. And then when they close the CDPs, they want the collateral back. All the validators just need to sign that and send the XRP back to them. And roughly that's the sort of operation for any crypto. It varies from chain to chain. But what's so nice about that is the security model that we're attaching is that all the stake and all the assets that our validator group has under them is effectively our security. So we have some of the biggest Cosmos validators in the world. We have Tezos validators. All these guys have many, many assets across many chains. So the risk or the collateral that they're putting up based on the reputation of their service that they're providing, if they do, if they're a bad actor on our blockchain, which might only be worth 200 million or whatever it is, and then Cosmos, which is 2 billion, and Tezos, which is however much, the amount of capital that they're losing from their delegators is incredibly high for being a bad actor, and there's slashing conditions attached. So by leveraging this group of very high quality validators, we actually increased our security model much more than if we just did it from scratch with all brand new people that didn't have stake across many chains.
Very, very cool stuff. And I think it's worth pointing out here too. I mean, this is really one of the first big projects coming out, built on Cosmos, and also like Ripple's ecosystem division. They invested in KAVA Labs as well. So I mean, like just guys, you got to go and check out some more information about this. Again, the links are down below, so you can find some more info there. Like, just see who's invested in it, see who's behind it. It's such an exciting project. Now, I just want to finish up here with kind of one final question. So, can you tell us where you are in terms of the current stages of development, and where are we going to be going from here?
I need to pull out a roadmap depending on how far we're going here. But roughly, what we have happening right now is on the Binance IEO. That's actually launching with a BEP2 token. So our mainnet, currently we're in testnet 3000, which is the final testnet that's identical to our mainnet launch. And on November 5th, we have tentatively, if all things go well, in 2.5 weeks, our mainnet will launch. So the IEO is happening roughly a few weeks before. And what that means is anyone who's participating in the IEO is receiving this BEP2 token that's fully tradable on Binance immediately. But then the moment the mainnet launches, Binance is going to hot swap on all their accounts the mainnet tokens that are released. So what is that mainnet, and what does it include? It includes voting, delegations, staking, pretty much everything that's involved with the KAVA token. That part will be functional and live. The CDP platform will not be live. That's actually a required upgrade that all the validators are going to have to look at, vote, and approve. I think roughly about 2 months following. So in December, that is when, all the code is roughly already there on our GitHub, but it needs to go through a bunch of audits. The validator group needs to look at it, review it themselves, and then they need to upgrade the network, effectively pause and fork it to then support the CDPs. And that will be happening kind of, you can expect that to, on the user side, be sort of like Q1 to Q2 of next year. So with the first assets, Atom, BNB being supported there, you should be able to do that on the test nets that we support earlier than that. But when it comes to actually using real BNB and real Atom to get a loan or receive a stablecoin USDX, that'll happen in Q1, Q2 of next year.
Nice, nice. And then, and what about like Bitcoin and XRP? Will those also be kind of Q1, Q2 next year?
So it depends on what form of Bitcoin we're talking about. If it's Bitcoin like BTCB coming from the Binance DEX, which is, I don't know if you're familiar with how that works, but there's the Bitcoin that's normally traded on Binance, and then it has a one-for-one market with Binance Bitcoin. And the difference is Binance Bitcoin's fully interoperable with their DEX. Yeah. You can trade your Bitcoin there, that Bitcoin BTCB to the DEX, and then trade on the DEX however you like. So that version of Bitcoin will be on the CDPs very quickly, just as fast as BNB could be. The Bitcoin direct version, it requires a much more thorough bridge. So it depends. There's actually a few teams that are working on different forms of this bridge, and KAVA will have the flexibility to adopt sort of which one makes the most sense or some combination thereof. But one that I would like everyone to look at is TBTC. I don't know if you've looked at Keep and what they've done. They built a spec for Ethereum to get a decentralized form of Bitcoin on Ethereum, but they're also doing that for Cosmos. So that could likely be one of the first opportunities that we have to get a decentralized form of Bitcoin over. And then in terms of the XRP bridge, we're building that ourselves, and that should also be like early next year.
Awesome. Awesome. Very, very cool stuff. Well, again, guys, info is down below, so make sure to check it out. Brian, thank you so much for coming on today.
Yeah, man, it's been a pleasure. I really enjoyed it. Let's just remind everyone of the giveaway that we're doing.
Oh, yeah. And the airdrop, guys. The airdrop information is down below. So it's 10 winners are going to get 100 KAVA tokens. Details down below in the description. So make sure to check that out, guys.
Definitely check it out and become part of the decentralized central bank that is KAVA.
Awesome. Thank you so much.
All right. Thank you. Bye.